Hello, thank you for joining us today. Thank you, Jeremiah. This is really something special to be here. And last year I had the privilege of speaking at the CISO Summit, and my very first entree into this life of InfoSec was actually at Black Hat a long time ago now. And so it's really remarkable to see this transition and this evolution of where we are, because my life started in a very different place. I was a supply chain person, and I'll talk about that a bit to give some context of why we're here today and what that means to how we're trying to change how we create this integrated approach of understanding risk, but also bringing together an InfoSec, because as Jeremiah said, there are two components to this. One is there are all these products, and these products have data and they have understanding. And then we understand on the insurance side a different more of context, right? What happened? But there's also this in relationship to what question that I think really deserves more attention, because yes, we have claims. We try to understand those claims. But in relationship to what? And that's the thing that the data sets actually provide us, and that's why our approach is how do we bring those two together to really make sense of it? So when we talk about the aha moments, I really wanted to spend time on our journey of how we got here, why we got here, what the thought process was, to really understand why we are here today and how we think we can be innovative together, right? And there are a million ways, and there are a million companies trying to do this. And I think there's a place for all of us, because it depends on how you want to enter the market. And so the it depends thing is, I think, the only definitive statement in insurance you will ever get, which is, what about whatever? It depends. So my risky life, it's nice and provocative, isn't it? Not really. But how did we start this really weird journey? And so those of you who know me know that I'm a serial student, and I like to think a lot about things. And so there are three distinct sort of risk management approaches I've taken in my career. One started in risk management in terms of supply chain risk and financial risk. So how do geopolitics affect supply chains? How do we understand intangible asset valuations? And that's really how I came into the InfoSec world, was how can we value data for loss? And so at that time, I was a finance person, and they're like, hey, let's write a book on built-in security. And I'm like, securities, you mean? And they're like, no security. I'm like, I don't know what you're talking about. But I figured it out. And what we started to really think about is, what does data cost? How do we value it? And so that really starts to dovetail into this transition, because we want to know what it's worth. And now we know that the worth and value of data is the worth and value of many organizations. So as I started down this real path of understanding how we take integrations of technology and cyber security, I was in the cyber threat world, threat detection world, and we started to really want to understand, what does it mean? What does it mean to me? What do I do about it? And so how do we then take these concepts of supply chain risk, apply threat intelligence risk? How do I make these investments? How do I know they're going to work? And how do we draw a financial line between those 2 points? And so my finance hat was, well, you know what? We actually have to help people really understand the investments they're making, but also the C-suite really isn't going to take it seriously until we show that there's real impact to the business. What's the business mission that's supported and enabled by the security practice? So as we start to think about cyber insurance, we want to think about what data matters. What does it mean to have contextualized data, so that the relationship to what question? So that we can start to understand, is there a way to get the distillation of basic controls that always work? I call it the cyber seatbelt, or don't always work, but provide a mitigation. Because part of, I think, our challenge as practitioners has been, well, it has to be zero. Does it? There's not zero anything. There aren't zero car crashes or zero house fires. Why are we always expected to do zero? And so really understanding what's going to mitigate and reduce risk enough that we can reduce exposure and impact of incidents, because it's all about frequency, impact, and severity. And where we've been in the cyber world in terms of insurance is high severity events. And so we think about, in my opinion, it's the afterthought dilemma. So the real aha moment for me was these many years ago, and I was reading, I think in 2018, I was reading page 5 of the business and finance section of the Wall Street Journal, which basically no one reads. I was apparently bored. But what I found, and I was really appalled by this as a person who cares about these things, is that on this way back, page 5, it was talking about the NotPetya attack and FedEx specifically, and how they had this major incident. They were literally pen and paper working away. And I was thinking, well, gosh, why on earth is this not at least on the second page of the actual portion of the front page of the paper? Why are we reading this where hardly anyone's paying attention? Because this statistic here is really important. The fact that it was more costly to them than a huge supply chain impact of a natural disaster. If you're thinking with your finance hat, why on earth are we not talking about that? And so this was the thing that I think really started this ball rolling, and it did from an insurance perspective. But also for me, what I was trying to understand is, why aren't we paying attention to this? Because what they're saying is that it's going to take a full year to recover, and it did. They were literally pen and paper for several months, Federal Express, in their European division, because they had this major incident. And so when we think about these things and we think about recovery, often the thing that's not talked about is how long it takes to recover from these types of incidents, beyond the investment and all of the other elements. And so as I'm thinking about this, I'm thinking about this company that we want to bring to the market, how do we help reduce that? And then how do we deal with this? They didn't have cyber insurance. Why? We're not a technology company, they said. All I know is I sign that little thingy when I get my package, and there's a thing that beams some information somewhere. That's technology. And so part of it is helping organizations understand we are all technology companies. And so when we look at the arc that this NotPetya event brought to us, while very high severity, we also saw that it was creating real disruption in the arc of how we start to rate and understand cyber insurance, because then the lawsuit started. Well, what do you mean? This is nation state, it should be excluded, but we weren't targets, and so on. So how do we start making sense of these things? And it becomes this very frothy thing as we start moving from 2017 to 2018, until you really start thinking about, well, if we have this one major exclusion, nation state, which we could have hours and hours of discussion about on its own, this is starting to influence the attitudes of where we got to and what we refer to as the hard market, as we went on, where it was extremely difficult to do insurance. The underwriting criteria were extremely difficult to understand. And part of it is because people were saying that they were doing things they weren't doing. Or they just weren't thinking about it in the way that really is aligned to a complete implementation. What are we investing so that we can understand how we do risk transfer? And so as we kind of go into this next process of how we were trying to build this, what we want to understand is what are driving the components of pricing these types of risk? How do we acquire the right data? And so when we think about these crazy metrics and these prevailing trends, we think about if there were any other business model, if we were running other businesses like this, these would be crazy metrics. We'd all be fired, right? Because it's not the right way to handle these types of business disciplines. So we're all trying to figure this out, and the market's hardening, and we're experiencing losses. And before we get to this next little piece of the slide, it's important to note the arcs of revenue. And so you start to see that the under 25 million in annual revenue group, they're getting hammered, right? Well, we know why. Lack of sophistication, lack of resources, and so on. But everyone is growing at this major, major clip. Remember, though, these are not breaches. These are claims. So if you think about more broadly what's happening at the same period of time, there were a whole bunch of people not talking about what was happening in their environments. And then, of course, this starts to happen. And the market literally locked up. And at this period, our company was about 7 months old, which was a real disappointment because people weren't super interested in talking about cyber insurance in April of 2020 at all. So what we started to think about was the approach where we go through security products and services providers, and I'll get more into that, but we only embed and bundle into those types of solutions. Why? Because they help us understand how well they're performing, what types of customers they have. Is there an aggregation risk, meaning do you have too many medical practices or too many warehouses or supply chain companies where we have to understand compensating controls? How effectively do we understand mean time to know? These are the things that we started to build around to understand, can we certify these risks to understand these things so that we can get better at understanding what is this low confidence driving us to higher premiums? And so you'll see we hit this peak and it starts to come back down. And there have been many discussions now about how the market is slowly starting to soften. But the challenge is that while that's happening, we already see the complacency is setting back in. And so part of it for us is how do we really start to understand how to help people stay vigilant, right? Because there's always going to be this change in this flux. And so we know this, right? There is literally almost all the money in the world going into these products. How good are they? We know that security people love to market, right? Because how do you get through the noise? And so this is part of what we were thinking about. How do we certify a product or a stack, knowing that there are two standard components to this? I have to patch, I have to have MFA, I have to do things in my own environment that keep us safe, my cyber seatbelt, but I also have a managed SOC, I have an MDR, I have an MSSP, I have services. And I do really fundamentally believe that services are a big part of this, right, to help manage the evolutionary change that we go through. The adversary is always going to change. And so while we continue security spending, how do we help companies know that they're doing the right things? How do we help them understand that the spend is correct? How do we incentivize them to do those things? Because while we're spending all the more, like Jeremiah said, we're spending so much money, but the breaches continue to escalate, right? This is just from this last quarter. So they're all trying. I mean, I don't have to tell you this. You're the last people I have to convince that the adversary is trying to do more bad things and they're getting more sophisticated. And if they're not so good at it, they can just go rent it out anyway. So how do we combat that? And there are a lot of organizations, including many insurance carriers, who believe it's really an intractable problem. I don't believe it's an intractable problem, but we have to be much more integrated in how we think about how are we going to make these decisions together. Because what's happening is our premiums go up, and this is interesting because you see that these are small, medium, and large enterprises, so they all experienced it at the same time, large increases. In the middle market, what we have seen specifically, and by middle market I mean somewhere between 50 to 60 million annual revenue to 500 million in annual revenue, those are the organizations who are being really impacted. Non-renewals, they were experiencing reductions in limits. They were looking at how do I even get this at all, or I had a serious breach and now we are not insurable. So we've seen a lot of these with partners that we have where our products are already embedded. And we're trying to figure out how do we help those organizations. And so there's a real significant activity in that particular category specifically. So for those of you who followed this mapping, so I remember like the one from 15 years ago, and we thought it was really busy then. So I was trying to find the most recent one. But it's getting more fragmented, right? And we think, and one of the things that we think about also is interoperability. So how do we align controls with products, with other solutions, or our NetSuite implementation, the apps that we don't know exist in environments, because this is just InfoSec, right? These are just cyber products, and we're trying to figure out how do we get all these in place, what matters, how effective is it going to be, am I going to get budget for it? When it just becomes more opaque, because how do we make sure that that aligns with the rest of what we're implementing into an organization to actually do things like drive sales? To not feel like these are just operational sunk cost conversations, but these are actually helping business mission. How do we manage and rate financial impact to these decisions? And so lastly, the last thing, of course, I don't have to tell you is it's getting increasingly difficult to have people who can help you solve these problems. And so we are continually reducing the number of people, we're adding jobs that we need, but we can't get them. And so how do we continually manage the fact that we have to have personnel supporting us, which is why I do think services are, it's not the panacea, but I think it certainly helps. And we see many organizations trying to split up and manage how they're going to deal with sort of managed SOC issues, continuous monitoring related to controls that are in place, partly driven by this very thing. So it's this balancing act that internal organizations have. and that the security professional has in trying to help their people, their executive people, understand these are the challenges we face because continuity of service that we're trying to deliver in this organization and also keeping you safe are the balancing acts that we have to have. And while also understanding this is how much it could cost us if we're out for a day, 2 days, if we're not able to ship product, et cetera. And so I also believe that this is a time for us to be able to have many different conversations in organizations because these factors are impacting what insurance premiums are in the environment. So when we think about what those are, right, and the unintended consequences of sort of that backwards looking and the retrospective view, and this is the thing that we want to combat most effectively is let's stop looking backwards. Because we have the ability and the data, if we can look at what we know in insurance and what we know from these products, when we see state change in these environments, how do we take that so that we can make those decisions more prospectively? That we can help people understand what risk is without being scary or tinfoil hatty, as we often are accused of being, while being able to make sure that we don't have to get to the place where the worst possible thing happens to get the right decision in place. And so we're seeing that organizations are trying to be more proactive. And so for us, in our world, in the Cysurance world, what we're trying to do is show them you make these investments, there's a direct correlation to how much you're going to pay for these solutions, for these policies, so that we can actually drive people to more security spend. I'm probably the only insurance person who's like, no, spend more money on other things. Don't spend it on insurance, please. Please, I'll discount it. Just put more money into your security posture. Because we believe that integration of technology and risk management and underwriting aren't seen as interdisciplinary when they can be. And so I have conversations with enterprise customers now, and they say, well, so if we implement these things, then you can have this amount of a discount. And I don't like to think about it as discounting necessarily. What I like to think about it is trying to get people to think more proactively about where those dollars matter and how to manage things like supply chain risk and other elements that can be very broadly disseminated, and where if you're the organization that starts that chain of events, what does that mean for you in terms of liability? And how do we reduce that liability, both for the organization, but also showing that our own products have their own type of liability. So for us, in our entrepreneurial moment, these were the things that we started to assemble when we brought together this product. So a proactive approach. What does it mean to be meaningfully resilient? And that's sort of, it's a platitude to some degree, and it's not intended to be, but what we're trying to understand is how can we standardize things like insurance policies so that people understand that there's a rule of the road, that there are basic controls that we know are effective in conjunction with other solutions. Joint planning, right? So how do we get other organizations, how do we get the C-suite, the CIO, the CTO, all in the same conversation, when the CFO is ultimately, in many of these conversations, the one who makes that decision. But now the security practitioners are able to have a different view and a different voice. Hey, if we buy this product, it will substantially reduce our risk by doing X, Y, and Z. And because we can do that, we can reduce the cost here. And overall, net, we have a total cost of ownership conversation. And that's the thing that I'm the most excited about, which sounds weird, whoever gets excited about TCO. But the thing is that now we can point to what does this really do to impact in total the organization, so that we can develop predictive risk. We can start to understand in correlating the events between these actuarial tables, what do we know really is happening? Because when we think about NotPetya, which was this thing everyone talks about, that actually isn't the thing that day after day grinds us out to really understand that we have losses all over the place. That was sort of a flash event, but it's not the thing that is really the true vulnerability that can break organizations on a day-to-day basis. So it's how do we orient people to prioritize and focus on the right things? And so that comes to prioritization and being able to help organizations understand what matters the most. Because when you think about that slide with all of those products in there and everything that everyone wants you to have in your environment, what matters to you? Because I have this discussion a lot with organizations when we're talking about well, what risk do I have and how much insurance should I get? And it's like, well, you're a manufacturing company, so what do you care about? You care about business interruption. You're a hospital. What do you care about? Losing data. And so it's easy when you start looking at these insurance forms to start ticking them off and go, well, this is now the thing that we have to use as our roadmap to be compliant and to be secure. And I was like, please, people, do not do that. That's like the worst thing ever. Do not teach the test. So it's really reminding people, think about who you are as an organization and what you want to accomplish and how you use tools like insurance and other security products to make that happen. And that's our opportunity, is to change that conversation from things that people don't understand to this is how this impacts our bottom line. So our mission, when we think about what are we really trying to do, it's a little bit small, but what we're really trying to do is create a proactive space to develop this integrated approach, where we want to have enterprise implementations where when someone is making a security purchase, they're thinking about how do we do this together, right? So we are now seeing that cyber insurance is leading a lot of product sales, which I never actually thought would happen. It was a theory. I thought, gosh, maybe we can make this happen. When people buy these things, are they really making the right decisions to get better coverage? But that should be the last portion of that discussion, right? So who are the stakeholders? And that really depends on how big an organization is. But how do you, as practitioners, how do you help support that conversation and lead that conversation to a board level? This has been a big conversation we've been having at this conference is, we asked for the board to be involved. Now we're not sure we want them to be involved, except for that now we know that there are personal stakes in the game for those types of people, right? The board members now have a personal liability potentially. So how do we help them feel comfortable that these are the right decisions? And then we need to quantify the probabilities. And this is like the most nascent part of what we are doing in total as an industry. We have a lot of work to do, and then we know that we have this claims data, and everyone's trying to figure out this real-time monitoring component and how do we see state change and how do we do early warning. And so the larger question, and this is a broad question I don't have the answer to, I could pretend I do, which is how do we separate the tactical from the strategic, which is something that we've been challenged with forever, right? How do we help people understand that day by day, you should probably make this change. We see an indicator or an indicator of compromise. What is that going to turn into? Because once we develop that multidisciplinary approach and really develop that joint context, we can make these decisions together, as opposed to we've bought all this security kit, now we're going to go over here and buy an insurance thing, and we're going to hope they're aligned. And so one of the positives in these changes in the cyber insurance market is that it has driven a much different view of how we should start making these purchases. And our view is it should all go together. It should be baked in. It should be part of what we do every day. So what are we doing about that? Our view is that we have two solutions that we want to bring to the market, and we have brought to the market actually, and that is a layered risk model. So what we do is we actually go and look at how effective are solutions and stacks, right? What is the security stack in place, and what are those controls? Because part of it is that cyber insurance is still a very high friction, not well understood product, which probably isn't a news flash. But I go to conferences with my husband, and I'm like, hey, so I do cyber insurance. And these people are like, what is cyber insurance? Which I'm like, wait, well, it's for your business and stuff. And they're like, I have no idea what you're talking about. So we need to make that much simpler. And when I talk to people every day in organizations, they just don't understand it. And so part of it is how do we make it so they can directly understand this straight line between you don't do MFA, you don't do your patching, and this thing doesn't get paid for, or this thing happens to you that's bad, right? It's really continually helping them understand that contingent business interruption is a really bad thing to not have if you're a manufacturing company, because it means if you infect somebody else's network, you're going to get sued and you have no way to fix that problem. So it's trying to create the integrated approach so you can remove some of the demystify too complex things for organizations, InfoSec and insurance, at the same time. And really to understand efficacy. So we talk a lot about right now this mission that the administration has. How do we get to product liability? Well, that was part of this concept, which is because there's no way for us to determine how well these products are performing, we wanted to create a straight certification that benefited the customers of the organizations who had the certification, so that we could have a flat fee policy that sits behind it. So standardization for us is a big thing, and knowing, of course, that that is not actually possible. But to get to the 80% of these types of coverages, and for all of these types of organizations, it's really a single price because you already have this certification in place. So it drives an incentive for organizations to say, I want to invest in these products because it helps me step through all the requirements that help me make better risk decisions, but also can help my company benefit financially. And now the conversation between the CFO and the security team is vastly, vastly different. So I did want to leave a few minutes for questions because I'm imagining discussions I've had throughout the week, there are many. So I'm going to just stop there for a moment before I go on any further to see whether I know that we have some microphones here. Does anyone want to ask some questions or discuss? Yes.
Hi, quickly, how do you do that? Do you have a tool that would integrate with our environments to pull the data or something like that?
Yes, so we go through sort of a standardized underwriting model for the platform itself, and then we have a tool that pulls data, and then there's also API connections that pull verification of data and then allow people to enroll. So there's automatic enrollment of customers into the certification warranty, and then they have the ability to add on those insurance components on a platform that then allows them straight enrollment. And so then we continuously pull data to understand the risk and the evolving risk.
Okay, so how does that compare to like ISO 27001 or SOC 2 Type 2 type of things?
Well, some of the controls are very similar. Some of them are different. Certainly, we use them as benchmarking to understand what are the basic controls that should be in place. And then also we look at the solutions that are in place because sometimes those vendors will satisfy 80%, 70%, 60%. And then we have to understand what the balance of it is that we have to take from the participant organization to make sure that that verification is in place for the controls that we can't see on the other side of the implementation.
Hi there. Question about, you're talking a lot about the technology and something like standardizing the technology or the technology used on the organization. Technology always changes. It's changing constantly. When you're a cyber insurance company, would it also be important to also look at the organizational model, the processes, the other certifications, like the other gentleman said about NIST or ISO and all that? How do you take those certifications into play? Because from a cybersecurity maturity perspective, those have already established guidelines from a process and organizational kind of continuity. Because I've seen a lot of companies that buy software, the greatest bells and whistles, and stick it on the shelf, or it's implemented incorrectly, right, or no governance. So how do you guys take that into consideration as part of this?
Well, it's a great question because one of the things is we like to be agnostic as much as possible around those things because it does always change and we know that. And part of it is that there will always be people, process, and technology, right? So we want to ensure that there are certain internal controls in place. At some point, what we like to really think about is what's an insurable event and what drives insurable events, and then how do we set benchmarks around that so that we don't become a blocker in terms of managing that. But what we like to look at are sort of the basic internal controls that we know are effective, like, for example, that would be like invoice control management, making sure that there is dual authentication, those types of things, as well as maybe a SOC 2 certification, dependent upon what type of organization you are. So those are the things where we try to set a sort of a standard benchmark, and then we fill them in based on the complexity of the types of organizations that are coming into the program and the amount of services being delivered, because we work with many organizations who provide full compliance support in addition to technology. And certainly I would never want to say that technology is the panacea, because that's not what we believe at all.
Thank you.
Hi, good afternoon. How are you? My question is Cysurance its own direct insurance provider or providing the umbrella coverage? Or is it kind of more of an insurance marketplace for the cybersecurity realm and extended?
Good question. So it's a few things. One is we're technically an MGU, so we have our own insurance products that we insure, and then we work with carriers as well so that we can sort of spread the risk that we carry in our own portfolio. And then eventually, I would say that the marketplace question is certainly part of where we're trending in the sense of being able to develop benchmarking where other organizations and people who are looking to make purchases can understand that these are products that have already been certified. So we look at that and we have solutions pages to say these are the people with whom we work. If you're looking for particular solutions, these are the organizations who can solve those problems for you.
Thank you.
Thank you.
If you allow me, we're also in the process of reinsure our own company. And the struggle I have is that the most insurance are excluding one essential part from the coverage, and that is when the actor is a state-sponsored or a state actor by itself. How does your program can help us with that? Because essentially, if they exclude that from our coverage, why do we need the insurance? Because, well, it's 80% state actors, right?
Yes, well, and that's literally, I think, more than one dissertation that's probably being written as we speak. One of the things, so I'm not a believer in that, and in our certification program, that's not an exclusion because, as we know, even if you could get attribution, are you sure they're acting on their behalf or the state's behalf? Like, how are you going to prove intent? Those types of things. So certainly, from my view, that is something that we don't have in the certification. We do look at the changes in the market, and they still are looking at those as exclusions. As we have experienced those types of incidents over the years, where they're starting to fall down, especially now with the court cases stating that these claims still have to be paid, is if you're not the intended target, we can debate that also, that you're an ancillary target, that your claim can still be paid. So the short answer to the question is we don't really have a perfect answer for that, but certainly we're trying to navigate it in a way we are as Cysurance to at least give people some support in those instances where if there's time that there has to be adjudication, they still have financial support in the warranty product itself.
Hi, Daniel Gibson from Axis Capital. A couple of questions. One, what does your engagement look like from a time perspective? You had mentioned APIs. Are there interviews? Is there audit, artifact collection? And secondly, how do you respond when CEOs say, yeah, but is it going to reduce our premium?
Yes. Yeah, well, part of where I got to when we started thinking about these solutions is I was like, if I had a nickel for every time I had a cyber person say to me, hey, we should get a discount because we have a great product. I'm like, we'd have this conversation on my private island. So yes, and it's like, well, okay, well, how do we make that a reality, right? How do we make that happen? So part of it is yes, we go through a very stringent process where we look at a variety of factors, and we try to not make it take too long, but once those programs are certified and we start pulling that data, it can happen very quickly. But then as it relates to do we get a discount question, the answer is yes. And so what we have done is we've set up a flat fee program, really delimited in certain benchmarks, pretty broad swath benchmarks of revenue, and that we're able to actually to flatten around most different types of industrial sectors. So that's what we're really trying to do is kind of not compress it, but make it so that because we have this bifurcated coverage on one side and coverage on another, that we're able to balance that risk between the carrier market and what we're doing over on the certification side. So I thank you very much for your time. Thank you for having me here. It's an honor to be here to share these ideas with you. And Jeremiah is up next.